Question: are stocks below the moving average 200 always bearish? Question: are stocks below the moving average 200 always bearish? We are a monthly chart of Xerox Corporation, Epic XRX, S-Ray, Romeo S-Ray. This is a Russell 1000 component. And we want to answer a specific question: are stocks below the moving average 200 always bearish? Alright? So the first thing that we want to clarify, what is bearish? What is the meaning of the word bearish? When can we say that a stock is bearish? Alright? Very simple. A stock that is bearish must display lower lows and lower high. Very important. For that stock, a bearish stock must display a new lower low. Alright, so if we pay attention to the price action in this session here, Xerox was bearish. So we have here, alright, a high, okay, and then we have a lower high, and then we have a low followed by a lower low. Alright, so we can say that in this session here, from 1999 to 2001, Xerox stock was bearish because that financial instrument, that stock, was displaying lower lows and lower high. Okay, so the question we want to answer: are stocks below moving average 200 always bearish? No. All right. So a stock can stay below the moving average 200. It does not mean that that stock is always bearish. As you can see here, we have Xerox stock, and the blue tick line here on my chart is the moving average 200. I'm on a monthly chart. Okay, you can see that. Okay, though the financial instrument, the stock, was below the moving average 200, one cannot certify that this stock is bearish. Why? Why can we not say that this stock is bearish? Technically speaking, is it bearish? Is it displaying lower lows and lower high? No. Another thing that we need to clarify is that when a financial instrument or a stock is bearish, it will be in a declining channel. So this is a declining channel here on my chart, showing clearly that this stock was bearish from 1999 to 2001. But look again, this stock is now below the moving average 200. Is it in a declining channel? No, it is in a horizontal channel, which means this stock is not declining and is not rising. But we have what we call a balanced market, which means, okay, the bullish force is almost equal to the bearish force. This stock is displaying equal low. Where are they? That is this low here. Pay attention here. Alright. And we have again the same low. Didn't display a new lower low. As we can see here, the price formed a low here and a new lower low in a downtrend. But though this stock is below the moving average 200, is not displaying new lower low, but was displaying equal low, a low, equal low, equal low, and another equal low. So the question that we are trying to answer here: are stock below moving average 200 always bearish? Is no. If a financial instrument is below the moving average 200 and it is not displaying lower lows and lower high, that financial instrument is not bearish. Or we can ascertain that that stock, the bearish momentum is not strong because if the bearish momentum is strong, the price will display a new lower low. Generally, when traders see a stock below the moving average 200, they want to sell and forget. This is a trading mistake, all right? The first thing one should do is to draw the channel or ask the question, is the financial instrument or the stock in a declining channel? Though if the stock is below the moving average 200 and it is not in a declining channel, we cannot certify that that stock is bearish. So the correct answer to this question is that stock below moving average 200 are not always bearish. Alright, so another thing that I need to clarify, when the moving average 50 crosses below the moving average 200, generally trader will think that the financial instrument is bearish. One more thing that I need to clarify is that when traders are using moving averages, they get into trouble because why? They don't know how to use moving averages. Most of the time, traders are trading moving averages instead of trading the price, the moving averages crossovers, instead of trading the price, all right? So the way that the moving average 50 is below the moving average 200, one must now check whether the price is displaying lower lows and lower high. Now, generally speaking, when the moving average 50 is below the moving average 200, traders will say that it is bearish, that they will say that this is a bearish crossover. No, it is not a bearish crossover. It is a bearish warning that the financial instrument may start displaying lower lows, lower high. But until that time, if the stock is not displaying lower lows, lower high, it is not bearish. All right? So probably if you have been trading moving average crossovers, for instance, you are trading moving average 20 crossing below moving average 50, and you want to sell, and you just sell because the moving average 20 dip below the moving average 50, if you just sell because of that crossover, it is a trading mistake. The first thing you want to clarify, when the moving average 50, the moving average 20, for instance, dip below the moving average 50, you want to draw a channel and expect the price to display a new lower low and a lower high. If the financial instrument is not displaying lower lows and lower high, it is not bearish. It makes sense? Another thing I want to clarify here, you can see that the stock Xerox is below the moving average 200. Okay? But look at the surge in trading volume that we have here. So now we have a financial instrument that is below the moving average 200. All right? In the old way of trading, a common, okay, trading, okay, approach, which is usually wrong because traders are trading something else instead of the price. Look at the trading volume. So we have average volume as something like 200 million shares being transacted. That's the blue line here on my chart. Now we are somewhere in 2009, at the end of 2009, we have this surge in trading volume, or we can say this is a volume spike. Volume spike. Now from 200 million average trading volume, we have now 600 million shares that has been transacted. So from 200 million shares, at the end of 2009, we have 600 million shares. What is the price doing? The price is still consolidating. So at this point in time, this surge in trading volume, we don't know whether they are sellers or buyers. But so far, we cannot say that they are sellers because the price is not displaying lower lows, lower high. But if the price dip below this consolidation, all right, this consolidation, and start displaying lower lows, lower high, which means the price now in a declining channel below this horizontal channel, then we can say that this surge in trading volume, that this is a bearish, okay, surge in trading volume. On the other hand, if the price breaks above that consolidation, above the level of $17, okay, break above and retest it, and find a support, we can expect a bullish trend because this is a significant trading activity that is taking place here. From 200 million shares being transacted, we have 600 million shares being transacted at the end of 2009, but the price is consolidating. Is it a distribution, or is it an accumulation taking place here? The price is still below the moving average 200. Does it mean that the stock is bearish? No, because the financial instrument is in a horizontal channel. Okay, for stock traders, very important to understand that one is trading the price, not the moving averages. All right. Another thing I need to clarify with traders is that during a trending phase, what I mean is this: dynamic bullish financial instrument will remain above the moving average 20. So if the financial instrument is bullish, is dynamically bullish, it will stay above the moving average 20. If a correction has begun, the first reaction of that correction will bring the price near the moving average 50. But it does not mean that the bearish trend has finished, okay? As long as the price is above the moving average 100, is not yet bearish. The stock is considered, theoretically speaking, is considered bearish if it's riding below the moving average 100. The moving average 100 is dividing the market into two zones: the bullish zone above and the bearish zone below. Now, we can say the same thing about the moving average 50. But what usually takes place is that when a financial instrument is bullish, it will become oversold if we pull back near the moving average 100. A financial instrument that is bullish can pull back up to the moving average 100. So you have the price above moving average 200, then it pull back near 50, then it pull back near the moving average 200, that is below the moving average 50. At that point in time, the RSI will become oversold, and the price will be at the moving average 100. But it does not mean that the bullish trend has finished. The price can go back above the moving average 20 and continue the bullish trend. But when the correction after a bullish trend, the correction that has started bringing the price to the moving average 50, that correction may be prolonged below the moving average 200. So the oversold of the oversold, so the first level of oversold is the moving average 100. The second level of oversold is the moving average 200. So you can see that this stock was trending fast. All right, in this session here, the price will be above the moving average 20. The first reaction, you see the first reaction, we bring it near or a little bit below the moving average 50. And the second part of the correction, we bring it below the moving average 200 or up to the moving average 200. But if the price is below the moving average 200, sometimes it just means that the financial instrument is oversold. But now we need to go to the financial, check the economy news, perform Google Assist tests, okay, check the economy news, okay, check their market share. Are they coping with the competition? All right. Perform, okay, a thorough, fundamental analysis. All right. The question is, are stock below moving average 200 always bearish? No. If the financial instrument is below the moving average 200, but is not in a declining channel, it is not bearish. A financial instrument that is truly bearish will also exhibit, okay, deteriorating financials. This is the end of the tutorial, and I hope you have found it useful. and we put into use to make excellent trading decisions. If you have any question or suggestion, put in the comment section, and in due course I will record another video to answer your specific question. We are the TSTW24 traders answering a specific question. Are stock below moving average 200 always bearish? No. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. Happy trading to you all, and I speak to you soon.